Okay. How is selling price determined? Selling price is determined by considering or accumulating the total cost. Selling price is equal to the cost price plus the profit margin. So then in this case, if the selling price is decided by adding a profit margin to the cost price, see anything whatever they spend and add a profit margin to the cost price and then deciding on the selling price may not work out in all situations because certain markets are quite competitive, highly competitive. If one wrong decision about what is the selling price can impact them or affect their business drastically. If the price happens to be at a higher price, yesterday also we have discussed that the danger is that the demand may fall. The customers may go to the other competitors' products. They may purchase other competitors' products. So that is a danger what we see in case of deciding a higher selling price. So in such situations where the competition is quite high and then they cannot afford to make a mistake in terms of deciding on the wrong selling price, what is the alternative? So the alternative is they can take the selling price from the market. First, adopt the selling price, even without looking at what is the cost, what is the cost of the product which they have to incur, not considering that, just focusing on what is the prevailing price in the market. Let's say other competitors are selling the products at some price, take the price as it is, take it. Then every business has some profit margin which they want to earn, so take the profit margin, deduct that, and then arrive at cost price. Selling price selling price minus profit margin gives us cost price. So now they work out on assuring that their cost is equal to this cost price. This is also rather called as target cost price. So now their target is to see that their cost is equal to this target cost price. They do not exceed their cost beyond this cost price. So that is their focus, that is their target. Now, in this process of deciding on what is the how to achieve the target cost, then whatever measures are to be taken to cut down on the cost. Let's say, for example, until now they are incurring 40 as the cost price. So all the costs which are added together divided by the number of units, cost price per unit until now it is 40. Let's say they also add a profit margin of 5. So the selling price now which is applied for the products which are sold in the market if it is at 45. So now this is the present situation. But let's say that the market has become competitive. Now they cannot decide on the selling price, but rather they have to take the selling price from the market. So now their selling price is 45, but the price prevailing in the market, let's assume that it is 42. If it is 42, they also have to offer the same price of 42 dollars per unit is the price which they have to offer to their customers, because if they uh, introduce the product at 45, they start selling the product at 45, the main disadvantage is there will be a decrease in the demand, so that they cannot afford. So they also will have to bring down their selling price to 42. Profit margin anyway is 5, which they have already decided. So from this, if 5 profit margin is deducted, the difference is Here we see 37. 37 should be their cost price. But as of now, how much are they incurring? They are incurring 20. So when they are incurring 20 and the target cost price now stands at 37. So what is that they have to do? They have to cut down their cost by $3. The difference between this and 40 and 37 is 3. So they have to uh, identify the areas or identify those excess costs which can be controlled. What are the ways in which they can cut down on the cost so that their cost per unit is equal to 37 in this example, or is equal to a cost which is arrived at or derived by deducting the profit margin from the market driven selling price. So that's target costing. So what do you think? Please uh, suggest what are the ways in which the cost can be cut down. How can they cut down on the cost? How can they um, reduce their cost? Any idea? Any suggestion? Please put it across. What do you think? If you were to cut down on the cost, what measures would you take to cut down on the cost? Please respond. But see, these are okay. Reduced profit is the final option when it doesn't work out. But see, these are profit organizations within objective of maximizing their profit. They are set up. So if that is what is their objective, um, they have to, yeah, they have to earn that profit. If if say, let's say there is no way that they can cut down on the cost, the only alternative what is remaining is they will have to reduce their profit. Okay, so reduce the number of labors. If the labors are in excess than what is required, then identify and reduce. See if the sufficient number of labor are employed, sufficient number of labor are employed, and if they are reduced, the work quality gets affected. See, with few employees or few labor, if the work is taken up, if they are put to work for additional hours, they will have to be paid overtime cost. Overtime cost, then that will affect the overall cost. The cost will increase. Reduce overheads, or raw material should be purchased at low cost. Low cost could be inferior cost. So see, these are all suggestions which have to be actually taken into consideration. But at the same time, one important aspect what has to be considered is um, the quality of the product should in no situation get affected. Keeping the quality of the product intact, any possibility of reducing their cost has to be looked into and work out on that part of it. So if material cost has to be reduced, reduce it, but the quality should not reduce. Anywhere if there is any wastage, that has to be eliminated. Some idle time is there, and which is unproductive. Measures are taken to check those things, or everything, every aspect of that has to be identified, verified, looked into as to how the cost can be cut down. So that effort has to be put in to ensure that the targeted cost price is what they achieve. Okay, so the concept of what is closing the target cost gap. So there is a gap. See, in the previous situation, we have looked into. See here in the previous situation, we see that the cost price is 40, but the target cost price is 37. So there is a gap between these two. 40 and 37, when we compare, we see that there is a cost gap of $3 per unit. And that has to be closed. So if that has to be closed, a value analysis has to be taken up. Value analysis talks about in the process of cutting down on the cost, there is no way that the value which is offered to the customer is compromised. So that has to be taken up. Then focus is on reducing cost without compromising perceived value. Can labor savings be made? Productivity be improved? Production volume is needed to achieve economies of scale. Economies of scale is when the production takes place at a large scale, the cost per unit comes down because, one second. What production volume is needed to be achieved? Economies of scale. When the scale of operation is at large scale, um, the cost per unit comes down. The reason is there are two different types of cost, broadly speaking, based on the behavior. One is a variable cost, another one is fixed cost. We see that fixed cost does not change. It is only the variable cost which keeps increasing with the increase in the output. So for that reason, the total cost increases but not proportionately, because one part of it is not increasing proportionately. For that reason, because fixed cost does not change, so the total cost does not change proportionately, and the overall cost, the total cost divided by the number of units, helps them to bring down on their cost per unit. So that is one possibility which can be considered. So this is the number of units. So as the scale of operation keeps increasing, as the production keeps increasing, cost per unit comes down. So that is one aspect what has to be looked into. Could cost savings be made by reviewing the supply chain? That is, supply chain is a sequence of activities starting from placing an order with the supplier, converting that, receiving the material from him, converting this material into finished goods, selling these finished goods, and delivering them to the customers. These are the sequence of activities connecting the supplier, from the supplier till the customer. So in the supply chain, is there anywhere that cost can be saved? Can any material be eliminated? Can a cheaper material be substituted without affecting the quality? Can part assembled components be bought in to save on assembly time? Incidence of cost drivers be reduced. So every possible area wherever it is possible for them to cut down on the cost, measures have to be taken to cut down on the cost, because they have to survive in the market, they have to adopt the selling price prevailing in the market, work out on the profit margin, deduct the profit margin, arrive at the target cost price. If there is a gap between what is the actual cost price and the target cost price, measures have to be taken to cut down on the, um, their actual cost, making it equal to the target cost price, or what measures can be taken to control the cost or cut down the cost without affecting the value, the quality of it, without affecting that. So what can be taken up? So closing the gap. Implications of target costing: pricing might identify sufficient cost savings to reduce the target cost. So they get a chance to understand about what are the ways in which there can be sufficient cost savings. At the same time, target cost motivates managers to find new ways of cost saving. So now the focus will shift towards cost saving. Every area wherever it is possible for them to cut down on their cost, measures will be taken to cut down on the cost. Okay, first let's do the content. Let's learn these methods. At the end, if we have time, we will work out questions on that. Small topics, we will put it aside and then take it up. At the end, if time is available, we'll work out questions based on that. Um, right now, we'll go to the next method, which is called as life cycle costing. Next accounting technique is called as life cycle costing. The concept about deciding on the